Good morning, dreamers. I'm popping in this Thanksgiving week with a quick update of stocks I've been buying lately. As I predicted, in the October time period, we saw a new low, so I was ready to rotate again. I thought you might find it interesting to see my most recent moves, so let's go ahead and dive right in. So here's what I've been purchasing just in the last 60 days, starting with BTI. Now you know this is a position that I've been building, and I'm almost near the max of what I'd like to have for BTI, or at least I keep telling myself that. So I simply continued to add to BTI as it's part of my investment plan. Same thing with BCE. This Canadian telecom is one of my absolute favorites. It's just a steady, nice yield. Now this is a new one for me, MPW, or Medical Properties Trust. You can see it's a REIT, and one of the reasons why I picked it up was the price dipped so low that it just got so enticing. So there's a couple things I want to say about this. One is just that overall, REITs tend to do really well in inflationary periods. And as the Motley Fool said, they don't necessarily tend to beat the market like they do during low inflation and low interest rate times, but they tend to hold up quite well during inflationary environments. And that's because of two things. One, their property values keep up with inflation, and rent also keeps up with inflation. So as I started looking for REITs that have been beaten up a little bit, I came across MPW. Their numbers are looking pretty good to me. In addition to this incredible 9% yield, you can see that the price fell from almost $24 all the way down to almost $10. And that's about when I picked up my shares at the end of October. So this one's a little bit of a risk for me, but it's a calculated one. We'll see how it does. The next one I've been adding to is Devo. Now if you saw my ETF video, you know that I love Devo. So in an effort to diversify a little bit, this is one I want to continue to build. So I put another almost $10,000 into Devo. And Devo has a 4.86 yield that pays monthly. The only downside is their 0.55 expense ratio. WPC is another long-term holding I have. And one reason why I picked that up is also the recent dip in price. So I put about $9,000 into WPC over the last 60 days. And WPC has a nice yield, over 5%. Fortis is the next one, FTS, which I'm also committed to building. But in addition, Fortis had a nice recent price drop down below $35. So I took the opportunity to add some to my position right now. So Fortis got $6,000 additional. The next one on my list is SCHD, one of my favorite ETFs. And I'm just committed to building that one. In addition to, it also had a nice dip, as pretty much everything did in October. I also recently added to Duke Energy, about $3,000 there. And BMO is another Canadian bank that I'm committed to building up. This one's been paying a dividend since the 1800s. So it's one that's new to me and one that I want to target to build. In fact, in this next tranche, there are several stocks that are new to me. BMO, SLF, APLE, PLD, and UNH. Most of these I picked up because valuations got so low. I decided to start new positions in some of these that I've been watching for a little while. The next one is SLF, Sun Life Financial. It's an insurance company with a yield of 4.66 and 21 years of dividend payouts. Now, I promised myself I would stop buying so many Canadian stocks, mostly due to the currency exchange fluctuations, which I don't love. But some of these, like BMO and SLF, were just too good to pass up. The next one was Verizon, and this one just got totally pummeled in terms of the price. So that's why I picked up a little bit more Verizon. Now here's an interesting one, APLE. It's a hospitality REIT that focuses on upscale rooms. It's got a really nice 5.7% yield that pays out monthly, and I like that. So it's new to me and one that actually had to stop their dividends during the pandemic and has recently reinstated with a dividend that's growing really fast. The next one is BST, which I found to mirror the NASDAQ pretty well. So I've been adding to this one, anticipating a boomerang effect at some point. It's got a beautiful 9.62% yield that pays out monthly. I added a little bit to STWD, which is also a commercial REIT, and I've got quite a bit in here already. I also decided to start a position with Prologis. Now, its yield is only 2.73, but that's actually way up from where it usually is, and I really wanted to take advantage of this recent price dip. So I started a new position. And this last one is also new to me, and honestly, I've been wanting to start a position with UNH for a while, because look at this thing. It never goes on sale. It's got a pretty small 1.26% yield, but that's okay. This one's just a growth holding for me. And in this last tranche, basically these are just dribs and drabs of investments and reinvestments over the last 60 days. So of course I added to O because this is a position I'm building, and I had to take advantage of some of the recent price insanity around AQN. Even though it's possible there'll be a dividend cut in a few quarters. Let's see if AQN's management team can get their act together around that variable rate debt to fuel the number of projects that they have going on. I added a little bit more to good, took advantage of some price volatility on BNS, added a little bit to BBN, my bond ETF, which pays about 8% yield monthly, and I recently got back into to take advantage of some of the price dips. Added a little bit to Southern Company, a little bit to Manulife, and bought a share of Ben. Now in total this represents $83,469 worth of rotation, which sounds like a lot, but it's actually only about 5% of my portfolio. Over the course of this year, you've probably seen me rotate about 4 or 5 times in different tranches, but you probably noticed that it's just around the edges and doesn't really affect my core holding. And I think I've mentioned this several times, but I still have not added one new dollar into my portfolio. So where did I get the funds to make all these purchases? Well, a big chunk of it was that I sold about $30,000 worth of tea. And the reason why I did that is because I noticed it had become one of my top holdings. And I feel like some of these other ones have a lot more upside, both in short-term cash flow and long-term appreciation, given the recent dips. I also sold a little bit of CVX because it is at an all-time high, some of Lowe's and SJR, which really pained me. Sometimes it's hardest to sell your winners. And the other way I got funds was just through dividend disbursement. As you know from my other videos, I make upwards of $5,000 a month. So some of this is just me taking my dividend disbursement and starting to diversify in other places. And those are my most recent moves. I wonder what moves you've been making lately. I'd love to know. Feel free to leave me a comment. Well, that's it for today. I hope you have a wonderful holiday week and weekend. As always, I encourage you to do your own research, then implement and learn by putting it into practice. As a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.